Good morning. Welcome to the morning market briefing. Today is Monday, August 3rd, 2026. Children go back to school here in Georgia in early August, which is mind-blowing to me.
Cobb County's in today.
Yeah. So it'll be, the roads will be packed, and but we'll be grinding here. And there's a lot to talk about today. We had a lot about going on in the international sphere as it relates to matters of high finance, as they say, whether it's currencies, commodities with oil prices, and then we also have a bunch of data coming this over the next week, particularly on the earnings side, but also on the economic front as well. But Tom, I wanted to start off with what's really in the news today, and that I don't know if a lot of people kind of understand the ramifications with. I think they'll see the headline of this and they'll say, okay, so what? What's the so what? And based on your political affiliation, you'll either say it's good or it's bad. And that is the headline that the U.S. opted and joined with the Japanese to buy large amounts of yen on Friday, and really boosting the price of yen relative to the US dollar. So obviously, if you're in favor of this, you say, well, this is a great investment. You're buying the yen when it's down, and we're going to make a lot of money on this. That's the high level view there. And if you're against it, you say, I can't believe we're using US taxpayer money to bail out foreign countries who are friendly with Trump. So that's what people say on the surface, but I really think it's worth exploring why we did this and what actually happened. So first of all, Japan itself spent about $53 billion firing up the yen. The yen is priced the number of yen to a dollar. So if the yen it takes fewer yen to buy dollars, that means the yen is strengthening. And so we went from 164 yen to the dollar to 155 yen to the dollar. So that's a really big move in a currency. And this was really led by Secretary of Treasury Scott Bessent. And then going forward, the U.S. said that it won't hesitate to support them in the future. Japan said it will also look at utilizing a facility that's set up during COVID that provides U.S. dollars to the tune of $60 billion a day, using Treasury holdings at the Fed as collateral. So essentially a pledged asset line, if you will, on Treasuries held at the Fed. So there are a number of reasons why this could have taken place, but Tom, I kind of am going to throw it over to you now and give your 2 cents of what you think happened, why it happened, and if it'll continue.
I mean, I think there is some concern. We've talked about it before, but the Japanese carry trade, which is basically the spread in interest rates, has led to a lot of people buying money or borrowing money in yen and then using that money to buy U.S. stocks. And I mean, notably, it's a big FinTwit thing. There's a lot of catastrophizing elements in FinTwit. There's a guy named Michael Gayed. He's a Lebanese American Twitter troll. He's at Lead Lag Report, and he tweets about this every day and has for as long as I can remember. Just that basically, like, it's all happening. Japan's going to blow up, and that's going to lead to a massive sell-off in U.S. equities as people have to, basically cover those borrowings in yen, with the yen losing value, and then by doing so, they'll have to sell a ton of U.S. stocks, which certainly could happen. But I mean, ultimately, this is beneficial for the U.S. because, one, it's a good trade. Bessent is a known currency hound. He knows how to trade currencies, and he is active in the markets in a way that most people are not up to snuff to actually transact in. And we saw with the Argentina deal where, yes, we did bail out Argentina for a nice, tidy sum where, kind of like Warren Buffett, when Warren Buffett stepped in to save Bank of America, he did it on his own terms and he made a ton of money. Was he doing it out of the goodness of his heart? It's certainly possible, but really it was a good trade. And he's the only person who has the credit quality to step in and put that money in and immediately make everyone else feel better about the situation. And that's basically what Scott Bessent is doing. As a function of him being the one who steps in, the trade instantly becomes profitable. And that's kind of what we saw pretty much immediately. I mean, notably, they're saying we sold euros to do this. So basically, you're putting pressure on Europeans who are, sort of at odds with us right now in terms of their economic and immigration policies. I mean, really all policies that I can think of. So he's kind of, basically, kicking the competition where they wouldn't like to be kicked, and then as the change falls out of their pockets, he's handing it to the Japanese, who are then basically handing it back to us with interest. So it's not a bad deal in my opinion, but it's certainly one I wouldn't want them to continue doing to an infinite degree, because if you do start to see the yen continue to collapse, we're just going to end up being like Japan, which is that they just print money repeatedly to save their own currency, and that's led to a really bad debt problem there. And of course, the Japanese 10-year is now at like 280, which is historically speaking like 5 standard deviations above where it has been really in the last 40 years. So that's something to watch, certainly, but I think that this is a positive step in the right direction. Should we have it be endless? Definitely not. Is the Japanese carry trade going to ultimately collapse? It's certainly possible, but I don't know that it has the... So many people are talking about it that the catastrophe probably isn't going to be nearly what people would say it is.
The other thing is, I think...
And how much money is that?
Well, and also if you're financing in yen and the yen goes down in value to buy U.S. stocks, you should actually want the yen to depreciate.
Yeah.
So I think that... I think that one factor could be that the Japanese do own a large amount of U.S. Treasuries, and the U.S. government doesn't want them to liquidate Treasuries in order to have to, stabilize their currency. I think the question for me is why now? And the yen has actually been fairly stable with relatively subdued volatility. There have been other times where you could do this. The other piece is Scott Bessent has typically taken at least in his trading career, would probably have bet against the yen, saying that their fiscal policy is unsustainable, and then really tried to kill the currency and make a ton of money for his clients. That's kind of how he's been portrayed, and that's how he operated with Stan Druckenmiller when they worked for Soros. What I would say in this case is that I think it's interesting why now. The other piece is, yes, they bought some yen. That's getting all the headlines today. What's not getting the headlines is they sold euros. And I think if you're a trader, you want to sell, you want to throw, if you're betting against something, you want to throw stones in the wettest paper bag that there is. And what Bessent is saying is he thinks that he's taking stones from the Japanese bag and throwing them into the European bag, which I think may actually be a very good trade. Because as much as he's betting on the yen, he's betting against what's going on in Europe. And if you look at the fiscal reforms that are taking place in Japan versus what's kind of a little bit in the good direction, a little bit in the minus direction in Europe, Europe's probably the one that you want to do, especially considering, my view is that the European Union, the Eurozone is more likely to cut rates going forward, which will further depress their currency. So I actually think that if buying the yen is, I don't know if they're going to win or lose on that trade. I have a pretty high degree of confidence that he's going to win on shorting the euro piece of that trade.
Yeah. This is an interesting, I was thinking about this, and this is a major tangent from the notes, so feel free to put the kibosh on it, Ben. But I was reading a think piece on the immigration policies of Portugal and Spain specifically. If you're at all online, you've seen the mass invasion of the city of Quito, which I didn't even know existed, but apparently Spain has had a foothold in Morocco just across the Strait of Gibraltar. It's literally one city with a big border wall that ironically is there to historically prevent invasion from North Africa, because you already have an established beachhead in Africa that you can defend from rather than having to basically fight across the Strait of Gibraltar. But there was some sort of flash mob sent out, and somewhere between 40 and 50,000 people jumped over that border wall and overtook the city of Quito, which only has a population of about 80,000. So you just had a huge mass immigration event in Spain. And the articles I was reading was basically saying that the Eurozone in particular, sort of the Belgian elite that run Europe have been sort of looking the other way with Portugal and Spain, because they've had huge influxes of people to the tunes of millions of people in both countries, because basically for the entire 2000, 2010, Portugal and Spain were major drags on the Eurozone because they had no growth, absolutely no GDP, massive debt. And they basically have been able to fudge the numbers because they're like, oh, all this immigration has led to GDP growth. But that GDP growth has been 100% spending on benefits for these people who've come over. So they're basically showing growth. Spain and Portugal are showing growth, but what they're really doing is the Eurozone is printing money, giving it to Portugal and Spain to support all of these illegal immigrants that have moved in from North Africa into those two countries. And there's been a big push to naturalize all those people. But the problem is because they're the two countries that have the easiest way to European citizenship, those people will hang out there for a year and then they'll go everywhere else. And now it's becoming a huge problem everywhere else because you can't, it's showing that the GDP is not real. It's not real GDP in Portugal and Spain. And I was thinking about that in the context of our discussions about Kevin Warsh's policies, which is that the idea is that we're going to grow the GDP from the bottom by you put the tariffs on, steel gets better, those create jobs, the steel goes into the economy, it's better steel, it's all, that flywheel burns brighter, spins faster, and GDP growth comes from the bottom up inside of the United States. And I wonder how much of the GDP that we had, and we've talked about a million times the printing of money during the Biden administration, but if you move in, call it 20 million illegal immigrants, you print the money to support them, GDP probably looks a lot better than it was. And it's probably deceptive. We were probably in a recession for most of the Biden administration because there was so much money printing specifically for that purpose, which makes GDP look good, but creates no actual value. And they're now seeing sort of the comeuppance there in Portugal and Spain because they've been reporting that they've had, 1-2% growth there. But in reality, all it has been money printing at the Eurozone level that's been filtered down. And now they've got this problem where they've got so many people who are now spreading throughout the EU because they've got the passport from either Portugal or Spain. I think it's a really dire situation. And I think it's interesting now that we've sort of changed gears and now we're doing something different. How quickly does that overwhelm the Eurozone? I mean, they're going to have to cut rates because all that GDP is not real and they're going to have to continue to print money in order to sustain this.
Yeah, I mean, I think to your point, I think there's a big, and I think maybe the political cycle doesn't help this. Every 4 years, you need to show something, or maybe really even 2 years now. But when you're thinking about building a fire, do you want to build it with
Pine
coal?
straw.
Coal, yeah, like coal, which is going to get really hot. If you're trying to actually make steel or refine steel, you use coal. You don't use wood or kindling. Wood or kindling is going to show a bigger flame faster, but the coal is going to get hotter, and it's going to be able to produce a lot more than your wood or your kindling would.
Yeah, so it's an interesting. I just wonder. The GDP numbers may not be as high now as they were in previous times, but in reality, is it a healthier, real wealth-creating GDP? Would you rather have 2% GDP where people are able to sustain their lives and be productive and have wealth and everyone grows in wealth, or do you just want to have GDP because the government just continues to spend through, well through the deficit just to sustain that number, make it look good?
I mean, remember, we have lower deficits today than we did a few years ago with much higher interest rates today.
Yeah.
So we're paying much higher interest costs, and yet our deficit is a little bit lower. So that's something to consider.
That was a big tangent. Sorry, everybody. It's interesting, though, I think.
Speaking of energy, Iran says Hormuz talks are underway. Trump called off strikes. I feel like we've seen this headline, Tom, countless times, like maybe every week, maybe a couple times a week over the last 6 months. Basically, Trump was going to go big and have a massive attack on Iran, but he has agreed, according to the request from other Middle Eastern countries, to not have a massive attack on Iran and instead make a deal. So Saudi Arabia apparently called Trump over the weekend. Mohammed bin Salman stressed the need to prioritize dialogue to reduce escalation and the importance of making every possible effort to achieve calm. Iran, for its part, said it is not negotiating with the U.S. but they are talking with Oman for a deal on the strait, and it might be reaching the final stages. I do think there will be a toll associated with this. Thought that for a while. I thought Trump's initial foray into saying he was going to take 20% of everything that came over was the opening there. Oil is down about 5% to the high 70s, low 80s. 10 years down about 5 basis points, still at 4.68% though. It hasn't really come down all that much. Stock's up a little bit this morning in response. To me, this is still noise. I can't really, I'd like to make a more definitive conclusion than that, but it's still noise.
Yeah, I mean, we've had the same exact conversation 50 times in the last 3 months. So we'll see where oil is on Friday, and then we'll see where it opens next Monday, because that seems to be the cycle. It does sort of one thing for a week, news over the weekend. It does the opposite for the next week.
AstraZeneca and Bristol Myers are talking about a potential deal. I don't know why AstraZeneca might be doing it now. Bristol Myers has 2 major drugs going off patent, Opdivo and the blood thinner Eliquis, combine total about 50% of Bristol Myers sales. But I guess if you like their pipeline, I guess now is the time to do it. AstraZeneca's kind of reinvented itself as a cancer company, and this would be the biggest deal ever in pharmaceuticals. It's not like a deal's agreed to yet, but something to watch. And then the last major story, and then we'll get a preview of the week ahead. California is approving the Proposition 40 ballot initiative, which means it is going to be eligible to be voted upon in November. This would be a one-time 5% wealth tax on billionaires. I think in modern history, this would be the first wealth tax to be enacted. So basically everything other than your real estate, certain exempt real estate, would be taxed to the tune of 5%. This was put forth by healthcare unions, actually, because they want to refill the bucket that was drained from the Trump cuts to like Medicaid and the like, where they didn't want Medicaid and other healthcare expenditures from the federal government going to support states that were not giving it to the people and it was intended to help. The healthcare unions are against this, and they want to refill the bucket with billionaire money, basically. At least I would say this is intellectually consistent. You don't spend money you don't have. I would disagree with what you want to do. Taxing the billionaires, giving money to people that wasn't legislated should receive money, but at least they're paying for it, I guess. That would be my one charitable thing that I would say on it.
Yeah, there's a certain degree of be careful what you wish for. I mean, on one hand, once you roll out a tax, the number of people eligible to be taxed by that will continue to increase, and it never goes away. I mean, think about that with the income tax. It started as a one-time wealth tax for basically billionaires, or at least very wealthy people back in the day, to help fund, wars, World War II. And now we all pay income tax, and they were paying 2-3%, and now minimum you pay 18, on the low end. So be careful what you wish for. They're more than welcome to do it. If you vote in favor of it, go for it. Who is voting? I think is a real tough question there.
I mean, even Gavin Newsom and the Democrat candidate for the next governor, Becerra, are both against it.
I mean, it's going to be destructive for who lives in California, certainly. But that's, I mean, you've already seen a big pushback on the pied de terre tax in New York. I saw a clip. There's a guy, he's sort of a mixed bag. His name is Scott Galloway. He has a popular podcast called Professor G. And he's basically, he positions himself as how to be extremely liberal, but also very masculine. That's sort of his vibe. He's sort of the lame Joe Rogan, or sort of maybe the left's best answer. And he has a lot of interesting points, but I don't necessarily agree with him on a lot of stuff. But he was going off on it because he was very much in favor of this. But then Mamdani decided to dox everyone, put out the full list, including name, addresses, and property values of all of the potentially eligible properties. And he's like, my home address is there, and there are a lot of wealthy people in, celebrities of all kinds, and wealthy people who don't want people to know where they live. Suddenly, all of their information is out there, especially when you have things like Luigi Mangione shooting people in the street because he doesn't like who they are. That puts all of them in real danger, I would say, because there's been a lot of political violence. I mean, you saw a couple get shot at a Tesla recharging station because the guy didn't like Teslas over the weekend. So I think that this is a real problem and there's a pushback. And I think that these kinds of things are going to have more blowback, I think, than they have positive. And also, like, if I own a property in New York and I rent it out and I get a massive tax, how does that help rent prices in New York? Because now I'm just going to increase that rent on those people who live in that apartment.
I'm curious if we're going to see more. The beauty of our republic system is that you can move states. I mean, if this was enacted at the federal level, this is why the federal government should have less powers than the states. Because if this was enacted at the federal level, that would be crazy.
Yeah.
But it is enacted at a state level or a city level in the case of New York City. And those people have the option to sell and move, and maybe they don't want to, but if it means that much to them, they can move. And I think some of them will. Some of them already have.
I mean, Miami and Texas have benefited from this. We've already had the Y'all Street movement where they're starting to get more investment bankers operating out of Texas. I mean, one, there's a lot more space and property values are much cheaper and there's no state income tax. But I mean, the budget for the city of New York is more than the state of Florida, despite having a quarter of the population. I mean, it's just insane. And yet they're running a massive deficit, and Florida is talking about eliminating property taxes.
Nassim Taleb talks a lot about being anti-fragile. And I think that is how the U.S. is constructed when these things happen at a state level, because you'll basically see, I mean, if my worldview is remotely correct, that, then in that case, I think that New York City will have a really, really tough time and people will leave, and California will have a really tough time and people will leave, and they'll go to places that are encouraging them, that want them. If I was not wanted in a state, I would move to a state that wants me. And I think that a lot of people will think the same thing. And if that's the case, then New York City will suffer, California will suffer, other states will benefit, and those other states that are suffering will be forced to adapt.
I mean, California, I would say, is more anti-fragile because the weather is nice. They have a lot of natural resources and things that almost every other state doesn't have. New York is not that. Mm-mm. It's filthy. The weather stinks. It's cold in the winter. It's hot in the summer.
And it relies on rich people.
And it relies, its
economy
funded.
is based on rich people.
Yeah, and people don't realize that, but it has to be. And
Yep.
if you start alienating them, then you're just going to end up with a giant slum. Which is if that's what you want. But the problem is, if you are someone who doesn't live at the elite level in New York and you voted to antagonize all the rich people, well, they can move and you can't. And your life is going to get way worse. And whose fault is that? It's be careful. It's a monkey's paw situation.
Big week this week. ISM manufacturing drops today. That's the biggest report that I'm watching all week. We do have a JOLTS job openings report, but talk about driving with the rear view mirror. This is a June report on job openings that'll probably get revised. So, I mean, under the Kevin Warsh Fed, don't regard anything this. Under the Powell Fed, you would focus on this a lot. Under the Warsh Fed, don't focus on it. I don't even know if you focus on the NFP jobs report on Friday. Again, a backward-looking information that's going to be revised massively.
Yeah, it's inaccurate. I'm excited for the ISM. I think that's the real tape we need to be measuring. So,
and that drops at 10 a.m. this morning, so we'll be able to talk about that tomorrow morning, along with Caterpillar earnings. They drop tomorrow morning as well. Have a great day. We'll see you tomorrow. Bye.